Welcome back. Now, at the full year mark, Santam's underwriting measures have given the group a boost. The insurer reported a 51% jump in headline earnings per share and is rewarding shareholders with a final dividend of nearly 10 rand. That's up by 9%. Company CFO Wikus Olivier joins us with greater perspective on the numbers. Wikus, thanks so much for your time this afternoon. So, the company faring well despite some high claims, and while sentiment has improved here at home, growth is still downbeat. Just walk me through the factors that were, catalysts of growth for the period.
Good afternoon, and good afternoon to your viewers as well. So from a strategic perspective, we've recognized that we're not going to, in the short term, to get much support from economic growth to grow our different businesses. So we've been very much focused on going after those profitable segments, but then also driving strategies to gain market share in those segments where we traditionally haven't had a fair market share, particularly within the direct businesses, also the younger markets, and then also through our partnership business. We've been very much focused on partnering with the likes of MTN to gain access to their client base from a cross-selling perspective. And then we've also been very much focused on our international diversification, where we've got a very small market share and where it's much easier for us to grow strongly. And there's new market segments that's really enabled us to achieve almost 10% growth in our net and premium base, but while still achieving very good growth in our core intermediated business as well.
We'll get into that international business in just a bit. I'd like to get your opinion around how the group managed to deal with this high claims environment. I mean, motor repair costs up higher than headline inflation, and weather-related claims also at elevated levels over the period. I know you've been implementing strategies to deal with the elevated claims. Just walk us through that and how that has been working.
Yes, we've implemented a number of underwriting actions over the last 2 years to deal with elevated claim inflation. Those included, in some cases, some segmented premium increases. Some cases we had to increase excess amounts. But very important for us was also to make sure that our risk selection improves, that we bring the right quality of business onto our books. And we also work through increased surveying with our clients from a risk management perspective. And it's simple things like making sure that there are sprinkler systems in corporate buildings, that those are actually working, that the electricity networks are in a good condition. And all of these measures has helped us to improve our underlying profitability, while also limiting the premium increases as much as possible. And we are seeing the benefit of those coming through in the more than doubling of our underwriting margin in 2024.
Just back to that local environment. I mean, I know your strategy is moving towards controlling what you can control despite the downbeat economic growth. But I can imagine that, the consumer's feeling the pressure, your client is feeling the pressure. So how do you then balance that, by increasing premiums at a low rate, but by also remaining competitive in the market and expanding your consumer base?
I think very important on that is that premium increases is actually a very blunt tool. From an affordability perspective, you can't just increase premiums constantly, because then clients simply can't afford insurance, and we'll start contributing to insurance gap. So that's why we're also focusing on the claim side. For example, from a motor book perspective, when we experience the high levels of theft, working with clients to install tracking devices to make sure that we can improve the recovery rate of stolen vehicles. I mentioned working with clients on risk mitigation for flooding risk, for example, for fire risk. There are things that clients can also do to reduce their risk. And then particularly within the motor book, where we have also seen the repair costs increase by more than inflation, we are actively working with all the participants in the full motor value chain to make sure that we bring down that average cost of claims, so that we're not reliant only on premium increases to ensure a sustainable business for us, our clients, but then also for our business partners as well.
You mentioned your international business at the top. I want to zoom in on India, a really fast growing economy. How has the group been faring on that front?
We've actually been doing very well in India. So we are invested in Shriram General Insurance in India together with our parent company, Sanlam. And that business has been doing really well with very strong top line growth, very strong earnings base as well. And from a prospects perspective, very positive about India. From economic growth perspective, the support of government for the industry, all providing some tailwinds to that business. And of course, the Shriram management team also being a very strong team and really doing well to grow their business also profitably, both through their direct channels and intermediaries, but also within the bigger Shriram ecosystem.
Wikus, before I let you go, we're about 5 years away from 2030, and that, part of the strategy, the future fit strategy for Santam. Walk us through how far we are in, making changes, implementing and putting through that strategy to position Santam for even further growth.
So we've made very good progress on that journey. We're not fully there yet. So within South Africa, I think we've got established very strong base in the broker market where we dominate, but we continue to do more work to improve the experience for our intermediaries. Then within our direct businesses, we've put a lot of effort into investments into client experience, ease of doing business. Within our My Way business, looking at launching new channels like inbound strategy, tied agencies. They've also recently launched a cashback strategy. So also focused on innovation to really drive growth within the South African business.
Wikus, thanks.
Internationally, we're also working on quite a number of initiatives to make sure that we can meet our 2030 goals.
Wikus, thanks so much for your time and just sharing those insights in the year that was for Santam. That was Wikus Olivier, CFO of Santam.